We want to bring in now Rob Luna. Rob Luna, Wealth Academy founder. Rob, first and foremost, my man, congratulations. You got bullish last year on these names. Again, re-bullish, if you will. You were pounding the table. I mean, golly, but this is crazy. This is a hell of a report. What surprised you about it? Or how surprised are you with the numbers? And how surprised are you at the reaction up over 20%?
I mean, it's amazing. I mean, this is like a micro cap move. You see 21% in a $1 trillion company. I think, the biggest thing that surprised me was the maturity of Mark Zuckerberg. I think really what took this stock down a couple of years ago is this whole metaverse, and they're still hemorrhaging cash in that part of the business.
That's the amazing thing. He learned how to game Wall Street. He found out just how much he can lose on metaverse that Wall Street would be okay with. They lose that amount, and everywhere else. I mean, but here's what's interesting, it's particularly on Jobs Day. Listen, the euphemism for productivity is firing a lot of people. They got rid of a lot of folks, and it seems like they're signaling that they may never go back to mass hiring again. Just always running an efficient, lean, mean machine.
Well, that's my whole thesis behind technology, Charles. Look, I think people are getting harder and harder to put to work. They don't, a lot of people are becoming entrepreneurs. And so if you're a big company that needs to scale, you can't count on huge headcount. You got to look at artificial intelligence, Web 3.0 technology to create those efficiencies. And I think that's what Mark Zuckerberg's saying. And that's the whole thesis behind my technology revolution over the next 5 years is less people, more technology, higher profits.
So now, a couple of visits ago, you passed on to our folks and our production team, and I mean, again, you were gushing about all of these things. You had a couple of picks that have done well, but one like a C3 AI is sort of struggling a little bit. And the question is, how do you broaden this out? In other words, it feels like it's very narrow. A handful of names that are just taking off like crazy. Everyone's looking around. Okay, what's the next NVIDIA? What's the next Meta?
Right. I mean, that's the tough thing, right? I think it's not going to be the super micro cap names. I think it's going to be the names that are maybe 50 to 100 billion. So if you're doing your screens, those are the companies that aren't trillion-dollar companies yet, like an NVIDIA, like a Meta. They've already proven themselves. But if you look, can they become a trillion-dollar company? And there's a lot of names, I think, that are sitting in that 50 billion to $100 billion range that are really going to be the next trillion-dollar companies over the next 5 years.
For tech in general right now, other than maybe Zuckerberg having a parachute accident or Elon Musk getting a hold of some bad weed, is there something out there looming that could, a speed bump of sorts that could derail all of this?
Well, I mean, look, you continue to get jobs numbers like this. The Fed's not going to have to be as aggressive as the market was pricing in terms of interest rates. And we know the thing that kills growth is higher interest rates because these are companies that need to borrow. But that's why you see a company like Meta, they also posted they have $60 billion in cash. So they could even pay that $50 billion. They're still sitting on $10 billion in cash. That's actually a safety zone. And that's why the smaller companies will struggle a little bit more. And that's why I'm saying don't look at those micro caps right now. Look at that $50 billion range.
Right. Anything else outside of this area? I mean, is it just, tech all the way?
Yeah, well, I think tech's where you want to be. But I think, look, a company that is, I have to talk about that's been an absolute disaster has been Disney. If you take a look at the go broke, go woke, go broke theme, that's been at the epicenter of it. They had to get rid of Chapek. They brought Iger back. He said about 6 months ago, it's time to start getting out of politics into storytelling like we used to. The stock bottom, cup and handle pattern. Look at Royal Caribbean, stock I talked about. It's been on fire. They've got a new ship coming on Disney this year, next year. Things are booking out. Where that stock is right now, I think there's a long way to go.
So Disney is the name, though.
I like Disney.
You love the risk reward here.
I like it.
Yeah. Oh, it's come down a lot. At one point, it was like an 11-year low.
Yeah, it's like $95 right now. I think if you got a 2-year time horizon, Disney's a good play.
All right, my man. You've been hot.
Thanks, man.
Great to see you.
All right.